So here we are as usual, Saturday evening 5 p.m. This is 18th of May. A very good evening to all our masterclass students. Let's quickly take a look at the market and few sectors. I'm using 4 different time frames here: monthly, weekly, daily, and the 125. But for this particular interaction, which is the first half is going to be on the market and the sectoral analysis. Let's focus on monthly, weekly, and daily. Well, Nifty is tough. Nifty is going through some crazy range bound activity. The daily chart is looking like one hell of a ride that we are all going through. Structurally, the overall markets from a long-term perspective, and this is exactly the reason I wanted to have the monthly into some bit of a perspective when we are doing this sectoral analysis. After giving a wonderful breakout, it's taking a breather. It's taking a breather, all right, but it's much more than just a breather for us. The momentum on the weekly time frame has gone down. It has stayed down. That has led to a lot of oscillation on the daily time frame. This just doesn't make sense. Momentum up, down, trend up, down. None of these readings makes any sense because they have been complete lack of follow through buying and follow through selling. Long story short, we are going nowhere. We have not gone anywhere. We have just kind of oscillated within a range, and the oscillations have been very sharp. It's very likely to continue. Prima facie, by the look of it, that seems to be the case. If you ask me, the weekly charts momentum had stayed down for quite some time. The daily charts did roll down, but they did not follow through on the downside like an ABC correction. We are amidst a bounce back after a fall. That's where we are right now. So are we going to open up on the downside? Or are we going to again go back to a life high, tease the life high and do some more drama? I don't know. I let the price decide. By the look of the daily chart, it has improved much more than what just a shallow bounce back should have been. What I'm trying to say, if the market wants to come down, it should not ideally give such a steep pullback. A market which is in a hurry to come down generally goes up just by a 1 or 2 bars and then comes down. So this is not a market in a hurry to come down, that's for sure. So the bare minimum that I can do is I can just keep an eye on, I use Heikin-Ashi. So I'm just going to keep an eye on the last bar's opening price, which is the low price. Essentially some Heikin-Ashi which will give me a lower shadow. Heikin-Ashi with a lower shadow is a sign of a bit of a downside. So we are kind of stuck in a range, in the middle of that range. Have no view honestly, but it's been a stock specific market. It's been a market which has given phenomenal or pretty good short term opportunities if timed well, if exited well also, or else they didn't sustain, right? So Nifty, there's no particular view apart from the fact that the choppiness will continue. Any sign of weakness, look for a lower shadow on the Heikin or a break of previous day's low. And let's focus more on the stocks. In terms of the sectors, now I'm just going to drag the RRG graphs from my other screen. And what happened to the RRG graphs? Let me just refresh this page. Seems like a bit of an issue. Okay, there you go. There we are. We want to use CNX 500 and update it. There we are. Now, let's first take a look at the last 1 week's performance. This gives us a 1 week performance sorted with the real estate and metal 6% gainer, a couple of 4% gainer coming in from the small cap and the mid cap. So that part of the market, that pocket of the market continues to rally. And then a bit of a gains coming in from oil and gas and healthcare and media. In fact, consumer durables also kicked in. Towards the end, it is the FMCG which is slowing down after a good move, and IT. The weak sector which stays weak is IT. Couple of weak sectors, relatively weak sectors which has picked up are the small cap, mid cap and media. We'll take a closer look at these sectors. So overall, it's been a fairly decent bounce back for the Nifty, and it's been fairly across the sectors. It's not just 1 or 2 major sectors pulling the market up. Let me just increase this tail length to 12 weeks, which is around 3 months. Let me fit the RRG graphs. And now I'm going to sort the tail. I'm going to sort the tail and I'm going to see which are the ones which are in the leading quadrant, the improving quadrant, the lagging and the weakening quadrant. Those who are not aware of RRG graphs, it's okay. Just understand one thing, that the natural flow of these sectoral relative strength is clockwise. So those which are in an improving quadrant ideally eventually moves to the leading. They are the next leaders, not immediately but eventually. Those who are the leaders eventually comes down and becomes weaker. Between the weakening and the leading, they can crisscross each other multiple times before going to lagging. So the natural flow of RRG calculations is a clockwise calculation. Auto, metal and consumer durables. Now if you can see, consumer durables is coming from the lagging, then improving and leading. So consumer durable seems to be gaining relative strength and momentum. Metal seems to be gaining relative strength and the momentum of relative strength. It's the auto which is losing the momentum. It's the auto which seems to be right up there, but it seems to be losing a bit of relative momentum. Let's take a look at CNX Auto. Okay, let me sort it. There you go. CNX Auto. Now, super monthly chart, very well established weekly chart, and very well established daily chart also. Right? So price is not resonating with the relative weakness of the momentum which the RRG graph is reflecting. We just have to keep this in mind a little bit. But there's no such sign from the auto. We had metals and consumer durables. So CNX metal and the monthly charts very strong here indeed. The weekly charts are a wide ranged. You can see that the CNX metal is one index which has bounced back from the recent fall and hit a new life high. And it has created a huge range. You can see the weekly range expanding. Strength there, signs of weakness, not really. Will this turn out to be some kind of a breakout failure in terms of momentum divergence? This only time will tell us. We cannot predict it right now. So pretty strong here as well. And then you have consumer durables, which looks like a very, very well established monthly chart and very choppy uptrending weekly chart, which clearly reflects in this behavior of the consumer durables. What we all need to understand is the consumer durables is in an uptrend and choppy, volatile uptrend. The Nifty is doing the same thing, but the Nifty is doing in a range, just like this. Right? So consumer durables also kind of fine as of now, but this sector has also moved to a new life high after the recent sell-off with the metals. And that's why it has created a huge range, a huge outside bar on the weekly. I do not think in the next week, in the coming week, we are going to get any significant move from either of these two sectors, which is consumer durables and metals. They probably will consolidate, slow down, die down after this one-way rally that it had. Going back to the RRG graphs. Now coming to the improving. Now this is the quadrant which I really like because this is where big gains can be predicted or anticipated. FMCG from the lagging has now moved into improving. FIN has improved. Bank Nifty and Nifty vis-a-vis CNX 500. So Bank Nifty. You would recall that every week when we do this analysis, we've been seeing Bank Nifty and financials in this particular pocket for quite some time. And this is a very, very encouraging sign because if it really plays out this way, then the market is not going to come down significantly. On the other hand, it may go up because Bank Nifty financials enjoy a maximum weightage in the overall market. FMCG is, let's say, a new kid in the block in the improving. It's just been 2-3 weeks that it has improved. Let's take a look. FMCG. Now, FMCG was struggling in this particular falling range-bound choppy oscillation. This. Now, after that, it gave a breakout, which is this one. Now it's consolidating after the breakout. Monthly charts are fine. There are signs of momentum slowdown. Weekly charts and daily charts are improving. We should keep our bias and view bullish and look for long opportunities from a short term point of view. I'm not too sure what is the possibility of the index going back to an all time high, because there are some signs of momentum slowdown here. But eventually, this kind of a formation may see distribution to a little bit of a corrective move possible. So FMCG view is bullish, but short term bullish. Now Bank Nifty. The monthly charts have gone flattish in terms of our momentum reading. The trend is up. Of course, like the overall market, the trend is up and choppy. It's volatile. We need to understand one more thing when I say choppy and upside is when you make a new high and you go up, and when you retrace, the extent of the retracements, the depth of the retracements are pretty steep. It's not an uptrend which goes 5 steps up and 2 steps down and then another 6 steps up and 3 steps down. Not like that. This is a market which is going 5 steps up and coming back 4 steps, going 6 steps, coming back 5 steps, something like this. So exit is crucial in this kind of a market. Entry is not, exit is more important in this market. Now, honestly, what I don't like in the monthly chart of the Bank Nifty, and it scares me, it gives me old memories at times when I see these kind of charts, is a formation which is like this. Now, I do not trade or track patterns, classical technical analysis patterns that much. But whenever I see a rising wedge kind of a formation after a pretty steep rising market, it always brings me memories of back in 2007-8. So I keep an extra eye and need to be extra careful with the Bank Nifty here. Any kind of a breakout failure can lead to follow through weakness. What about the coming week? Not that great. Daily charts trend and momentum has slipped down. This has given us a customary bounce back. Bounce back is pretty decent, no problem. But I think I will put Bank Nifty and Nifty in the same category. It's improving, but just keep an eye on the last day's last day's low. Because if the last day's low is compromised, you will see a next leg of fall. So Bank Nifty, banking names, we need to be a little careful next week. Let's see. We're just at that juncture where it's kind of make or break. Next, quickly, towards the end of our list, we have the oil and gas, which has, as you can see, has clearly come down and lost its relative momentum. And it should now start to underperform. Should. Reality, though, is one of the biggest gainer last week, but you can see it's kind of losing that relative momentum. And healthcare. All these three sectors are important, especially oil and gas, which is over here at my end as CNX Energy. You can see very clearly, it just stands out right on your face, the weekly chart. Monthly had a great run. You cannot ask anything better than this. And so after a great run, a bit of a multi-month consolidation or a bit of a correction is healthy. The sector is losing momentum on the weekly chart. It's just not losing direction. Generally, we call this a slant divergence, which leads to oscillation or choppiness on the daily time frame. That's exactly what is going through here. And so, sell on the rise and buy on a dip. That is, look for resistances, and if the price stuck at the previous highs, look for a short. Back to the supports, look for a long. That kind of a view. So the daily chart has improved, trend and momentum both has improved. It's been a steep move this week. I would just wait out a little bit. Just wait out, nothing fancy. Real estate. Pharma, CNX Pharma. Similar story. Very, very similar story. CNX Pharma and the energy pack, and then real estate. CNX Realty. So this also is giving me a feeling of whether this is going to turn out to be something like this or not. Let's see. Any kind of a breakdown will be interesting to see, keeping in mind this kind of a slant divergence which is playing out. Another sector which goes back to an life high last week And so the $1,000,000 question is, will it lead to any kind of a breakout failure or not? Let's see. But not easy to trade these kind of formations on the chart. Now towards the end, we have media, IT, small cap, mid cap. So I'm going to focus on IT. IT has been in the lagging quadrant for quite some time. I'm not able to see improvement of the underlying momentum. Price wise, it is not a bad chart. You would have noticed that I had earlier shared. Let me drop a couple of drawings here. It will help us. It will stay on our charts. So my view is, looking at the weekly chart, which is this one. The monthly chart is giving us a 3-month correction after this move. Structurally, it's a pretty decent chart. It has kind of respected the previous all-time highs. It has given us a decent correction. If we figure out the correction, it would be around 15%. Let's check. On a high to low basis, it's around 15%. It's around 15% in 10 to 12 weeks. This is a weekly chart. So it's a 15% correction on the sector is not bad. It's back to its previous fractal high on the weekly chart, which is an important level. If we take a look at, this is something like, I'm not a big fan of trend lines, but then if you take a look at the lows, and especially I generally draw these kind of channels with the help of RSI. Probably will take me a little bit of time to pinpoint the closing price which I want to use. But if I drop just one today evening, then I would probably draw something like this. So I'll call this a channel as of now, and let's see whether these levels support. The point is, I don't have participation kicking in. It's not the Infosys, the TCS. These stocks are not showing that kind of leadership. TCS was one which was showing pretty impressive move 2 weeks back, but last week it completely gave back. So not a bad price wise and time wise, not a bad juncture from where it should ideally stop selling and can give us a bounce back. Just keep an eye on Infosys, TCS, Wipro, HCL, Tech Mahindra, and let's see whether these guys give that supporting move or not. So before I wrap up the sectoral analysis and the Nifty analysis, Nifty continues to oscillate, and you just have to be really good with your stock selection. If you trade the index, take care of yourself, extra care of yourself. If you are a stock trader, then you can just forget the Nifty for the day and focus more on the stock, because stocks are giving some move. Exit quickly, be it a long trade or a short trade. This is not the market where you look for alpha returns. Whatever returns you get, I think you should be fine with that. Right? So that's the view on the Nifty and the market. Now I'm going to take the next 5-10 minutes and just walk you through the multi-time frame approach and what are the do's and the don'ts. And then I'll quickly take your doubts for today's session. Right? All right.